All right, now the markets are down for the second day in a row. And we had some big name retailers report their earnings this morning, and it didn't go well. And that first retailer was Kohl's. And they reported falling sales, falling foot traffic, and they also lost money for the quarter. And that stock got pummeled, down 26% at one point. Now, currently, that stock is down 23%. Now, their earnings are pretty telling. This is Main Street. And if Kohl's, if they're hurting, that means Main Street is hurting. You don't have to look at any other metrics. You don't have to look at any other economic metrics or barometers. If Kohl's, if their sales are falling, that means Main Street is slowing down. Now, conversely, we had TJX, the parent of TJ Maxx, Home Goods, HomeSense, and Marshalls report their earnings last week. And they actually saw sales going up. But if Kohl's is seeing sales go down, TJX is going to be 1 or 2 quarters away from having the same report. And that's going to be the mantra that's going to go for the rest of the retail sector. And there's no doubt that Main Street, the consumer, is slowing down. These are the spring months. And if a retailer like Kohl's is seeing slower sales, that's pretty telling. Now, we had Best Buy come out with their earnings this morning, and they actually beat, and their profits actually came in above estimates. But they are continuing to see falling revenue. And this is the 8th or 9th straight quarter of that. And what does that mean, falling revenue, falling sales? Well, that's just more proof that Main Street is slowing down. The spending of the U.S. consumer is slowing down. Now, we had Dollar General come out with their earnings, and they actually reported that same sales stores were up, and their earnings actually came in above estimates. So revenue was up, net sales were up, earnings were up, and these places, they're going to be the go-to places in the next few years as the wallets of the U.S. consumer begin to tighten. People are going to be going to those dollar stores. They're going to be going to discount shoppers. They're going to be looking for bargains. Now, we also had Foot Locker report their earnings this morning, and those earnings actually almost doubled the estimates. Now, their revenue came in slightly under estimates, but any profit that this company can muster out is a plus because this company has a lot of debt, and this is a company that's still on shaky legs on whether it's going to survive in the next few years. And regardless, that stock is up nearly 20% today. So many of these stocks, if the numbers are coming in line or better, you're moving 20% plus. And if earnings are in the other direction, you're down 20% plus. So we're seeing penny stock moves in some of these big name retailers. Now, we had pending home sales come out this morning, and those numbers were atrocious, and they fell the most in 3 years. And as I've said, the average Joe is going to have a tough time getting their foot in the door of these new homes. With mortgage rates going up and the price of homes going up, you're going to continue to see these mortgage applications drop and these home sales drop. These metrics, they're going to get worse as the year progresses. Now, we had the weekly jobless claims come out this morning, and those numbers rose to 219,000. And in my opinion, as this economy weakens, as we get further into the year, you're going to see these numbers jump above 300,000. As we get close to the election, they're going to begin reporting the real numbers. Now, the continuing claims came in at 1.719 million. Now, all of these numbers are seasonally adjusted, and I haven't dug in and looked at the unadjusted numbers. But in my belief, both of these numbers are being manipulated. Now, onto the commodity front. Oil is down $1.50, and we're back under $78 a barrel. And the precious metals, they're taking another breather today. Silver's down almost 3%. Copper's down under $4.70 a pound. Now, almost all the agricultural commodities are down except for coffee, and coffee's up about 2% today. And it continues this march back to its all-time record high. And that cup of joe is going to begin getting more expensive. Now, this market is still down, but it's slowly marching its way back up. Now, tomorrow we have the PCE inflation report. And if that report comes in hot, like I believe it will, that's going to be the final nail in the coffin to any talk about the Fed cutting interest rates this year. And what is that going to do to the market? Well, we're going to see another down day. The market is not going to like that. And we may very well see the Dow under 38,000 by the close tomorrow. This quick stock market commentary, please like and subscribe.